Okay guys, this video here today is about the mistakes that traders make during their time when they first started trading. So some of the things I'm going to talk about here are the things that I myself that I did when I first started trading. So we all have different opinions about trading. We all have different views, visions, and on what we want to come out of our trading. Some start trading because of the passion for the market. Some start trading because of they want the lifestyle, or some start because of they want to really change their life and they want to plan for a certain financial goal or want to have money at the end of the day. But when reality hits us, when all our expectations and things don't happen our way, we start to panic. And then we do things that when we are on our sober minds we don't do because of the emotions that you get stuck in when the market does all these things to us. So some of the things I'm gonna talk about here today, some of the mistakes that I also did myself, and I just wanna highlight some of them. So have the market ever stopped you perhaps 2 points before the market reverses? You close a trade with a small profit only to see that the market has run another 100 points. The market reverses the very same minute you entered the trade. Like it's guaranteed that when you enter, the market is gonna reverse every time. You enter the wrong trade. You enter the wrong trade by mistake and yet you make a profit. Let's say you wanted to buy Euro USD, but instead you bought USD JPY, but yet to make so only to find a few seconds later that you made a mistake, you bought the wrong pair, but it's in profit, and then you just let it go and let it run. Finally you made some money. You close the losing trade and to find out hours later that it should have been in profit. You watch many trades evaporate into losses. All your trades were winning, but suddenly you didn't move your stop loss to break even, and then now the trade is in the loss. You got a solid trading signal, but you hesitate to enter the market, and then you realize later that you have missed a good trade, and then you try to chase the move, and then the move is gone. And then when you try to enter the market, and then the market reverses the same time you try to enter it. So guys, all these things happen to us because of our mindset. Perhaps if we can change our mindset, maybe some good can start happening and our trading perhaps can start to change. Because like if we can change our mindset, anything is possible. Because like some of us tell ourselves that perhaps the move will keep on going too far. Like no moves last forever. The bull market doesn't last forever. Same as the bear market doesn't last forever. This is an opportunity of a lifetime. Okay, fine, there are opportunities in the market. There's always gonna be the next opportunity. Fine, if you miss this one, there's always gonna be another one. So you can't risk half of your account because like you see maybe this pair CAD CHF is gonna go down here, then you risk half of your account. What if it pulls back and then shoots up again? What are you gonna do? This market has gone too far. It can't go any further. This one only happens when you try to fight the trend. So you see the trend going up, but when you just wanna trade, you see that maybe the trend is gonna. You telling yourself that the trend is gonna reverse because you wanna trade against the trend. I don't have enough money. I need more money. So this is where greed starts kicking in. The minute you say you need more money, this is where greed starts kicking in. There's only so much opportunity in the market, in the world. So each of us deserves only so much of this. So this one is just limiting yourself. You see, there is money in the market, right? But then this one is about your belief about money and your relationship about money. So if you believe money is the root of evil, obviously you won't make money in the market. But money is a tool that can get us from where we are now to where we want to be in life. So basically guys, again, mindset plays a critical role in our trading life. So again, when you go further, guys, 50% of the time traders are right, but they tend to lose more money on losing trades than they do on winning trades. And many people that are trading, they have experience in trading, they have experience in technical and fundamental analysis, and actually their trading in fundamental analysis is actually good, and that's why more than 50% of the time people are correct in the market. So this is an illustration that I took out from an online broker's website. I can't mention the broker by name. So on this one, these are the 13 highly mostly traded pairs. So averaging here on Euro USD, more than 59% of the time people get the market correct. They win. But at the same time, averaging there on Euro USD, people tend to make close to 65 pips on each trade they place on Euro USD on average. But when they lose close to 127 pips. Why? Because they let losses run. Then they close they close early the trades that are making money. They close them early. They cast their winning trades early, and then pass their losses. They let them run for far too long. So on an average, people do make money on the market, but at the same time they lose a lot of money on the market. So how is this so? It's because of people have poor money management skills. People trade because they don't have a trading plan. When they do have a trading plan, they don't stick to the trading plan, and then they let their losses run. Instead of cutting their losses, they let them run. And also they add on to losing position. They see that okay, maybe this market will extend further. You're already losing. You sold here, and then you sold here. Fine, the market went in your direction, and then you are in a losing position here, and then you are trying to sell this market here again. What if this market keeps on going higher and higher? You already have a losing position. Why do you keep on adding on another losing position here? Fine, there is a zone here, but what if this market keeps on going higher and higher? And that's where you're gonna play your account in that mindset. And then again, people try to trade against the trend. This is very dangerous. And then they use too much leverage, and also they do not know how to scale and position sizing. And also this is the most dangerous one. They try to trade off fundamental data. Fine, fundamental data takes time to play out. It doesn't just happen because like the market has to digest the data that has just came out, and then it will take the direction for the rest of the day. So people try to speculate around fundamental data. So this is where spikes happen, and then people blow their accounts when they try to speculate around the fundamental analysis. So guys, all in all, we need to have a trading plan there. So we also need to know how to manage our trades. So we need to treat trading like a business. Businesses make money. If you treat trading like a hobby, go and play golf or play soccer or something. Trading is a business. You need to treat trading like a business. You need to have a trade checklist before you enter the market. You need to analyze the performances at least on a weekly basis. Open your charts, and then open your when you open and close your trades before. Just see where you did your mistakes there. Just see where your winners. How did you analyze the markets before you made the trade? Just analyze your performance. You see, this will keep you on the game for a couple of for longer. Acknowledge your losses as well, and also your risk and reward management. And then also trade a few currency pairs. You can't trade 1,000 currency pairs expecting that you'll know well. Trade a few currency pairs, and also mostly use always look at the bigger picture, and also use multiple time frames. So guys, I hope this video will be helpful to you guys. If you have any questions,